we start?
Yes, I'm ready.
Okay. So, good morning, everybody. Welcome you all for the day 2 sessions of the ATAL sponsored faculty development program on technology disruptions in management. So, on behalf of College of Management, SRMIST, we welcome each and every one of you. Today for this session 4, we have with us Dr. Ravi Thodla. The title of the session is Emerging Technologies in the Financial Sector, and it is going to be a discussion. First, it will be initiated by Dr. Ravi Thodla, and then after 40 minutes, Mr. Naveen Surya will join us, and then he will also give a presentation, and then we can have our questions and doubts. Okay. So first, to tell you about Dr. Ravi Thodla, he started his career as a college teacher in October 1979. During these 4 decades, his passion for teaching and research has resulted in an invaluable learning experience. And the key focus areas include creation and dissemination of knowledge, assurance of learning to students, and collaborative research with faculty members and students. Some highlights of his experience are innovative teaching and learning methods in line with international standards, association with international universities like Edith Cowan University, Australia, and other academic partners like the University of Central Florida and the Berlin School of Economics. He also has experience in organizing several programs, including management development programs for the public and private sector undertakings in India. As a freelancer, he would like to continue teaching students at all levels online with a particular focus on accounting, finance, and taxation. On behalf of College of Management and on behalf of all our participants, we are happy to welcome you, Dr. Ravi Thodla, and we are very much eager to listen to you, and we are looking forward to a very interesting discussion with you and Mr. Naveen Surya a little later. Okay, so now I open the floor to Dr. Ravi Thodla. Sir, I will also share your PPT.
Thank you, ma'am. That's a brief and very, very powerful introduction. Very, very humbled, and thank you very much. So, finance and technology. I always said that finance and technology are conjoined twins. That is, they are always together. If you look at the connection between technology and finance, you need to go back really far, far into the past. Let's take a look at what happened. The earliest form of exchange, as we all know, was barter. And the moment barter got replaced by money, whoever invented money had in mind possibly the fact that there will be some technology that will be ushered in, which can be made use of. So the moment barter was replaced by money, finance and technology started flirting at each other. This is what I normally say. So, minting, that's one form of technology. Printing, that's another form of technology. Paper currency is another form of technology. So, printing, minting, and the paper form of currency, all are some examples of how technology and finance got integrated from time immemorial. Although we tend to think that the moment the word technology is used, we all tend to think that technology is what we have today, that is computer-driven technology. Not necessarily so. Not necessarily so. Technology can be any form of technology. For example, building a ship is also a technology, shipbuilding technology, because that facilitated trade. and that facilitated trade across countries. In those days, when people are talking about, I don't know, they are talking about Atlantis, they are talking about Inca civilization. There are people who talk about Mayan civilization. People talk about Viking. These are all civilizations that were there long time ago, and these were all people trading with each other across the world through ships. So that's another form of finance, trade, right? So technology in its current form is something that has evolved over a period, and that happened, as we all know, with the advent of computers. With the advent of computers, I always say that it is the finance function that embraces technology of any form first, before the other domain functions do that. They do. For example, when computers were invented, and we are talking about the earliest form of computers that are huge ones, where you insert punch cards and it will take 24 hours for data to be processed. It will be punched and you can go and retrieve it next day. This is what was happening in Guindy Engineering College when my brother was a computer science student in 1969-70. That's about 50 years ago in India. Then slowly the big computers got replaced with personal computers, that is the desktop, and of course later the laptop. All those things happened, but the moment computers came in, the first thing that happened in the domain of finance is that accounting got integrated with technology, what we call mechanized accounting. Mechanized accounting, people started using computers for accounting, and then later on the accounting software came. There also was the evolution of ERP solutions. We are talking about SAP, we are talking about Oracle Financials, we are talking about the high-end version of Tally. There's so many accounting packages. And then also the core banking solutions. Core banking solutions was a great innovation because branches were strewn across the country, all over the world, not necessarily only in India, although the geography of India with so many villages is quite peculiar, but it is the same with countries like US, the countries in Europe, or we talk about big countries, China, everywhere. When core banking solutions came in, that's one way of integrating banking operations. So a lot of these things happened in banking. Most of the advancement happened in banking because the advent of internet in the late 80s and early 90s not only facilitated core banking, it also brought in its wake other things like net banking that we all know. Then mobile banking, the banking as we know today, where you sit at home and the banking is at your fingertips. There's an app that you need, that's all. If you have a bank account, download the bank's app and do all your banking from home. It has almost become virtual. You don't even have to go to a bank to open an account these days. It has almost become virtual. I had this experience with opening an account with HDFC Bank last month. Everything was virtual. Everything was virtual in the sense that they call it an Insta account. Just go, enter the account that you want to open. Then they ask you for details, give the details. They don't even ask you for a verification at that time. The account is open and the KYC happens the next day through a video call. You need to hold up your Aadhaar card and your PAN card, show them, and your KYC is over. The account is open, it is operative, and it took only 24 hours. So very, very easy. Virtual, we are moving towards virtual banking. We don't even need to step into any branch of our bank anytime these days. Everything can be done through this. And then the emergence of payment banks, which became a very important interface as a mode of making payment. As we all see, our Google Pay, our Paytm, our Phone Pay, all those things have facilitated finance in a much bigger way than what we really hope to have sometime in the later part of the last century. After the liberalization and privatization, we were indeed hoping for some reforms in banking, but we were not quite as prepared for the kind of revolution that happened in the early part of the new millennium, and it is progressing. Digital transformation, a total digital transformation where everything is digital. You are using a lot of technologies without really knowing that we are doing it. For example, I told you about opening an account. There was a robotic process automation that had happened, which facilitated this kind of non-core routine low-end operations in a bank. You don't need a person anymore to open an account. RPA takes care of that. So that's very big. That's a very big leap. It's a big advantage. It's a big advancement. And as we started moving up the value chain, a lot of these changes happened, and the digital platform became all pervasive. The equity markets that we are trading in today, that we talk about, that also we sit at home and do it. Those days, you had to have a broker, call the broker in the morning to give a buy order or a sell order, then keep monitoring. It will disrupt your work. So it was not so easy for you to trade or invest in markets those days. Today, as you say, everything is driven by a mobile application. You have ICICI Securities, okay, there's an account there. You have an app and you can watch the market, put stocks in the watch list. It will give you alerts. You take a buy or sell decision, because unless you are an intraday trader who will have to spend all the time in the markets, if you say invested long term, and if you are a delivery based positional investor or trader, you don't really have to bother. There is a lot of convenience that happens to you. It's so easy for you to do this. In investment in mutual fund, once upon a time had a lot of hassle, need to fill in a lot of forms. Today, everything again is facilitated by intermediaries, and Paytm. There are other platforms, but Paytm is the recent one to enter. So it brings the fund house, that the asset management company, which is issuing the instrument, and the investor. You can simply go invest in mutual funds, and that has also become hassle-free. Everything today is convenient. So this is something that we all know, and there's nothing new that I'm telling you. It's all things that you already know. There are a few things that we do not know also. For example, blockchain. We have an expert who is going to come and talk about it. I have raised some questions with him. In blockchain, I'll only briefly touch upon blockchain later, but I would like to concentrate a little more on RPA, robotic process automation. There are certain things that happen with the use of this technology that we really are not familiar with. This is really interesting. There is a new platform that is emerging today, which is called e-market for trade finance. I'm not sure how many of us are aware of this. This is a very latest development that has happened in the field of finance, which is e-market for trade finance. So what is it? Let us assume that the trader, or the manufacturer rather, the manufacturer in Tirupur, near Coimbatore, is going to export 1 million t-shirts to Walmart at the rate of $4 a t-shirt, let us assume. It may be more, it may be less, but for the sake of convenience, I'm assuming that it is $4 a t-shirt. 1 million t-shirts, $4 a t-shirt, which is 4 million American dollars. And if you put a rough 70 rupees to that, 4 million into 70, you can make your calculations. That is the amount. 40 lakhs into 70. So you will make your own calculations. So this is the underlying asset. The underlying asset is the export of 1 million t-shirts to Walmart at $4 a t-shirt. But let us see what happens to this. Once the exporter gets the product ready, he has to find a clearing and forwarding agent. So from there, the costs start increasing. CIF, cost, insurance, and freight, all put together, let us say 8%. Very conservatively, I'm saying, all put together, let us say 8%. So to your $4 million, there's another 8% value added. It goes, gets into the ship, and as it gets into the ship, you send the document of acceptance, that is with the bill of lading, to your importer in USA, that is Walmart, and Walmart accepts, and then you open a letter of credit, swipe and take all the money away. And in the process, you pay your banker, maybe another 2%, you pay your bank. So 8 plus 2, 10%. And look at the other banker who is guaranteeing that. The banker for Walmart who is guaranteeing this payment, he will get another 2%. So that's 12%. And after this instrument becomes a tradable instrument in the e-market for trade finance. That is what is happening today. There are some banks who would like to sleep over it for 2 months or 3 months and then encash it. There are some impatient banks that do not want to do it. They rediscount it with some other bank or maybe even a hedge fund which is willing to take the risk. And as it goes on, all put together, about 15% of the original trade of $4 million has come to stay. Look at that. The person who is toiling in the factory, who is making his investment, engaging labor, and who is getting the work done, he ends up with 4 million. Of course, his margin may be thin, and let us assume he gets a 15% margin. So out of that 4 million, he gets a 15% margin, which is about 0.6 million. But look at all the others who are getting 15 million for simply doing the activities. It's not that they don't do work, they do work, but it is not in any way comparable to the work that is being done by the manufacturer. This e-market is the latest disruption in technology that has happened. Most of us do not know it. I came to know about this only recently because I was talking to a consultant from India who is a strategic advisor to this new company that has floated this e-market platform, the technology platform. And then there are some important aspects in banking which escape our attention. For us, banking is receiving and making payments or making investments, withdrawing money from an ATM. And since it is mostly digital today, we don't even have to have much of cash at hand. Everything is digital. And for us, it is that. But for a bank, it is a lot more. There is this important aspect of opening an account. We are not talking about a client in India. We are not talking about a bank in India. We are looking at an international bank. Let us say you take a bank like HSBC or maybe Citibank or Bank of America or any of these top banks in the world. When they open an account, because they are international, when they open an account for a customer, their KYC is much more than our own Aadhaar and PAN card. For them, it is more important because they need to look at the profile of the client. You need to see whether he is not from a country that is in the sanction list of USA. That is very important. If he is in the sanction list of USA and if you open an account, the risk is yours. And then you also see if he is not from a country that is either in the gray list or black list of FATF, Financial Action Task Force. That KYC part itself is today done by technology. Robotic process automation takes care of this. The moment the name is fed, the moment the name of the client is fed into the database, will flag. And then the next thing that happens is that after this, they go and look at other important things like
Ravi sir, one second. Participant, please mute yourself, participants. Madam,
yeah, there's music.
Yeah.
To go with the presentation. Fine. All right.
Okay.
Okay. So the other important aspect is, which is something very critical today, which is anti-money laundering. Lot of fun, but there is a limit to this application. How we overcome that limitation is what Naveen has to tell us. We'll listen to him. And so that is it. So what is happening today is the trends that I'm talking to you about. RPA, I told you about. Blockchain, I told you about. Artificial intelligence. But above all, we also have some concerns about cyber security. Of course, a lot of progress has been made in this area today. On the hardware side, we have the firewalls. On the hardware side, we have sophisticated firewalls. But as we get more sophisticated, the hackers are also getting more and more sophisticated. So they find some way to enter a database by inserting worms, and they tend to hack. That is one side. So the other side, this is one side, and so the other side is we need to protect the end users. That is where device authentication has come to be a very, very important aspect. This is one development in technology which is really very unique, and it is very, very protective of the customers. You look at it. See, for example, I would always think that one-time password is one of the most important breakthroughs in cyber security technology. I would always think that OTP is one of the best, because whatever happens, everything that people can do, if ultimately it brings you to a one-time password, it will be very, very difficult for you unless the person is putting a gun to your head and asking you to disclose the OTP. It is not going to happen. Hackers generally don't come in person. They operate either through phones or through computers. So in the form of a KYC verification, they'll take details, they will do everything. But ultimately, when it comes to OTP, that is where they will get stuck. That's one thing important. And today there is one more thing called device authentication. If I am doing it from another device, the software will not accept this. It will ask you for more important security questions. So if you hack from another instrument, or if you hack from another device or a laptop or a computer, it will be very difficult, because ultimately when it comes to device authentication, it becomes a problem. So there is a lot of advancement that has happened in cyber security, lot more to go. So there is something called insider-driven threats also. Sometimes it is easy to compromise an employee, either through money or through blackmail. They try to compromise the employee. So there may be insider-driven threats also, but that can be taken care, because overriding checks, you have limitations, you have limited access to information, all those things you do. Still, sometimes there may be insider-driven threats also that can also be overcome. So cyber security is one very, very important aspect that we need to look at when the integration between finance and technology happens, because it's all money. Because it is money, of course, information is also value. Information is also wealth. Theft of data is as good as theft of money. Theft of data is as good as theft of money, because very, very important secrets get compromised, and so it will become very, very difficult. So cyber security has made a lot of advance, but I still think that as we progress, we need to continue to keep vigil a tight watch on this aspect called cybersecurity. Progress is the exchange of one form of nuances is what I said there. In fact, the word that came to my mind is nuisance, but I refined myself and said nuances. Progress is the exchange of one form of nuances for another. But that does not prevent us from progressing, right? It's also one form of nuisance for another. I went to a bank, wrote a check, gave it to my counter, that is the authorizing officer, took a token, and with Asiatic patience, I used to go and sit in that Indian Bank or State Bank of India, and my token would read 293. It will take at least 45 minutes. I used to sit there, right? That is done away with the ATM today. Just go draw money and come, right? That unless the ATM says no money, there will be money invariably. Now RBI says that if you say no money, you'll have to pay a fine. There's a penalty now. There's a recent RBI rule. So that is there. Can you ever imagine life without technology, particularly for booking your tickets? It is air ticket or train ticket or bus ticket or whatever. When did you last go and stand in a booking counter in a railway station? You would never remember. Long time ago. When did you go to Air India to book a ticket? Or to any airlines office to book a ticket? There are so many facilitators. Make My Trip, Yatra.com. All those people are there today through those platforms, or directly go and do it with your company website. You find a way. These people offer you discount, you do it. This is where technology comes into play.
Ravi sir?
Yes, ma'am.
Sir, Naveen Surya sir has joined.
Yeah, hi Naveen. I will wind up in the next couple of minutes. I will wind up. I just wanted to say that it is impossible to think about life without technology, and technology is just an aid to man. It can never replace. It is always the human mind that drives technology, and for some time we tend to think that it is technology that is going to drive man. It's not so. Although sometimes we have got addicted to technology in the sense that we gave up our memory and recorded everything in our mobile phone. We don't remember numbers. In that sense, probably we have become enslaved to technology. But there are other aspects of technology that we can control. It's not that technology controls us. We control technology. So actually, if you look at it, the integration between finance and technology has come to stay, and it is going to get more and more and more sophisticated. It's only going to make our lives easy and maybe a little lazy as well. That walk from my house to the branch in the bank I am missing today, because one reason is this COVID. Another reason is when I can do it from home, why should I go? I just sit at home and I don't do it. Life has become easy. Maybe it becomes a little lazy also, but that doesn't matter. Today, in the COVID conditions, not stepping out of the house is much easier. Order everything in your Big Basket or Zomato or whatever, and it comes to your house. Stay at home, stay safe is what technology has done to all of us. And so I would always say long live Fintech. Fintech is a technology that has come to stay. Long live Fintech, and thank you. And as I said, there's some questions that we are going to talk to about blockchain and other areas to Mr. Naveen, and we'll do that after he makes his presentation. Thank you, Naveen.
Thank you, sir.
Thank you, Dr. Ravi. Now we have with us participants, Mr. Naveen Surya. So welcome, sir, on behalf of College of Management. We are so fortunate enough to have you here today for our ATAL-sponsored FDP on technology disruptions in management. And we could identify that you are the right person for our session here on FinTech. So first, I would give you a brief about Mr. Naveen Surya's profile. Mr. Naveen Surya is an investor, founder, mentor, advisor, and the FinTech industry thought leader. Mr. Naveen Surya has held various roles and positions. He is the chairman non-executive for Fintech Convergence Council. He is the chairman emeritus non-executive for Payments Council of India. He is the advisory board member of Blockchain and Crypto Assets Council of Internet and Mobile Association of India. He is the independent director for Satya Micro Capital and various other organizations. He also is a startup investor for Zimio, FPS Technology, ACSZ, etc. He is the advisor for multiple local and global conglomerates. And to tell you about the education of Mr. Surya, he's a commerce and law graduate, and he has a company secretary professional membership with Institute of Company Secretaries of India, which he completed in 1995. And he's an MBA with specialization in finance from Mumbai University completed in 1997. To give you a brief about his career, he joined a cement manufacturing company as management trainee in 1995, and later in 1997, he joined Tata Consultancy Services in the management consulting division. In the year 2000, he joined SL Group to set up multiple businesses in financial services as a founder. For example, Intrex India Limited, ITX Trade Exchange, its Cash Card Limited. And in the year 2017, he had a position at Its Cash as managing director and CEO. He has made special contributions as a member of Reserve Bank of India, GIRO committee. He is a member of Dr. Wattel Committee on Framework for Digital Committee at Niti Aayog Limited. He regularly contributes media articles, interviews, and discussions on various subjects related to digital payments, fintech, and micro digital, and also about economy issues. And he makes regular keynotes, panel discussions at various local and global conferences and seminars. So participants, today we are going to have this session on fintech, and you all know fintech is there in several areas, like we have insurtech, then cryptocurrencies or digital currencies, and then different forms of fundraising, modern fundraising like P2P lending, crowdsourcing, and also robo-advisory services. So the list goes on. And as Ravi sir was telling us about the banking technologies, robotic process automation. So now Naveen Surya sir is the right person for us here today to contribute his rich experience and his knowledge on fintech. So now, Naveen Surya sir, the floor is open to you. I will stop sharing Ravi sir's PPT. Now, I think you can share, and now the floor is to you, Surya sir.
Thank you, Dr. Kavita. Thank you, Professor Ravi. I think was very interesting. I could only listen last 5-10 minutes of Ravi sir's presentation. And it occurred to me that the saying that money is a bad master and is a bad master but a good servant, right? The same is applicable probably to technology also. And while you were talking about my profile, it became apt. It looked like it became apt for all of us as a management institute that we are jack of all but master of none. So I just wanted to start with that caveat first to all of you. They don't expect that I am the master of everything. But I will try my best to share all the insights that I have learned so far. And I think the real test would be that what kind of questions come from all of you. My job is to share what I've learned, which not necessarily could be true all the times, because life is always contextual. I hope all of you can see the screen.
Yes, sir. Yes, sir.
Yes, sir, we can see.
All right. So I was asked to talk about emerging technologies in financial sector, and I've refrained away from listing the technologies in a financial sector because I guess that all of you are aware of. I've rather focused on kind of what's the impact that's likely to happen on financial sector of some of these technologies. And this presentation, see it more as an indicative discussion points, not as a comprehensive kind of a document which you could refer to as full details.
Surya sir?
Yeah.
Surya sir, actually the screen is blurred. It's not
Okay.
clear actually.
Is it clear now?
To a certain extent, the second one is clear.
Let me just reshare.
We can read. We can read. First one, it was very much blurred. Second one, we can read.
Should I reshare the document if you want?
Maybe
Yes,
you can try. I think it's not.
maybe you can try.
Let
Yes.
me just reshare it just in case.
Yes.
Yeah.
Yes.
Is this better now?
You have started sharing.
Yeah.
But still, it is blurred.
Okay.
Sir, actually, I feel that there is some network issue there, sir.
Yeah, maybe that's why.
You can hear me well, right?
Yeah, we
Yeah,
can
we
hear you.
can
Yes,
Yeah,
sir.
we can see you and hear you, but presentation is not.
Yes.
Okay. Let me try something different. Maybe the settings that I've enabled are not helping. Sometimes they're supposed to help.
Yes, sir. It happens.
I've just tried to do optimized, and let's try this. Can you see it now?
Yes, sir. Perfect.
It's fine. Yeah.
Perfect.
It's just that it is showing the slide in. It's showing me showing you my screen, but not the slides, I guess, right? So it's not clear.
Now it is clear, sir. Now it is
It's clear.
very clear. Yes.
Yeah, but it's probably not showing you the full slide. So let me. Yeah,
It's showing
probably this would better.
Yeah. Perfect, sir.
Showing the video also. Okay, I think we're fine. Anyway, there's not much kind of content on the slide. So let me get into the discussion up front. So today's folks, we're going to, and good to see the huge turnout. I wasn't expecting, to be honest, more than 50 people. So really appreciate all of you joining. And I hope I'll do justice to your spending this time with all of us. So there are 3 points that I'm going to discuss in my presentation. And I look forward to more of a question answer session, starting with Ravi sir and then with all of you. First, I need to understand some sort of technology adoption in any sector, especially in relationship to the adoption curve. When does a technology become important for financial sector? What has traditionally has been the trend? We do see technology today encompassing all our lives, daily lives, everything that's already happening. But when does generally the trend shows that it impacts financial sector? So that's the first part. The second part is diving into that. What exactly is the impact of various technologies on the financial sector? So I put in different dimension to the sector itself that you could talk about at the macro level, that how does the sector look like, a traditional view, a fintech view. Then again, if you look at from a customer point of view, what are the areas of the financial sector? And then finally, from organizations who are doing these businesses, how it looks for them. Why I'm doing these dimensions, because the impact of different emerging technologies in all these aspects and this all different dimensions will be different. Some would impact certain dimensions more, certain segments more. Some would impact less, some of the other ones. And finally, some concluding 2 or 3 points. Okay, so that's the agenda for today, folks, and jumping right into the next one. You can hear me fine, right? I can hear some audio echo. I guess somebody's not on mute. Can we mute the people who are not speaking, please? I can hear the audio echo in the background. Okay, so how does the technology adoption curve move, or how does it impact the social behavior, or how does it impact, let's say, the overall the humans, let's say, human lives, right? So if we just take 3 simple examples, the personal computers and mobile phones, interestingly, both were introduced or invented somewhere in early 70s, and we are like 50 years out. We don't realize it. And internet, which came in somewhere in 80s, 83, started getting commercialized. If you take these 3 trends, which is actually built today's technology trend from an industrial age to a silicon age, they were the pillars, right? Whatever we see today in a technology context, we see these 3 things. So they started somewhere in, let's say, 70s, 80s. And if you see, what did they impact first? What was the first thing that consumers did? And I will also say 2 fundamental points that I learned, especially during my days at TCS. There are only 2 things any technology does. One, it reduces the distance, the geographical distance between people. Second, it improves on the speed of anything that you do. Fundamentally, these are the two things that a technology does. And these two factors impact multiple dimension in any activities that you do, whether your personal life communication, whether businesses, or whether stock market doing, let's say, 2T+5 settlement to T+2, T+1, and crypto is doing real time, right? So everything that you have introduced as a fundamental technology ends up making the world borderless, or a flat, as we used to say with the book context. And it actually kind of enhances the speed more closer to real time. So if you look at these technologies, what did they impact first? They changed the way people used to communicate, right? I think we all know it. I don't need to go into detail. So first impact was on the social behavior, where it had to prove its mettle that for the initial adoption of all of this. So communication, then it led to information, which means a lot of information, news items, various, let's say, data that were not available were easily available. Google came into being, so for people to find anything will become easier. As those two became pervasive, then finally people started using these tools for entertainment. So these three pillars continues to remain as the first adoption curve in most of the technologies. And if you see most of the newer invention, anything that happens always happens around these three dimensions. Whether you talk about chatbots, whether you talk about voice bots, you talk any new technologies, they always have a dimension of something, one of these three first when they get introduced to the consumer. And these are the things that daily lives, that we all use in our daily lives. Now, the moment any new technology establishes itself in these three pillars, and it is pervasive, it's proven, then it leads to the commerce transaction. And that's where we saw advent of e-commerce, which started as a monoline businesses. We all know both Amazon and Flipkart started as a book service today, and then expanded into all categories. And now they don't even call themselves marketplaces, but platforms. Platforms where the entire ecosystem is built, irrespective of any kind of businesses. But as long as you have consumers, they have a need, they want to fulfill it, right? So the commerce became the next big leg, which actually gave boost to the same technologies. I don't need to explain mobile commerce. I think we all use mobile apps. In fact, that's bigger than the internet commerce or e-commerce as traditionally we know it. I heard Raviji already talking about ticketing. I mean, how the whole dimension and the behavior changed. And I'm emphasizing word behavior everywhere because it's a radical change from the way you were doing things earlier. You were writing letters, you moved to email and messages, you were going and standing in a queue to buy ticket, you just did it on a click. So a fundamental change of doing the way you do things. The needs are same, the consumers are same. What you're actually doing is same, but the way you do completely change. And that's the aspect of the behavior, right? And that's the test of a technology. When it can change your behavior, that's the test of the success. The moment it establishes these two pillars, that's the time financial services or a financial sector impact start becoming visible. Because fundamentally, most financial services are means to an end. They are not really the product. We consume really the goods and services, right? The financial services enables us either to buy or sell them. It enables us to protect. Let's say if you buy insurance product, it enables us to sometimes purchase if you need a credit, right? So it actually is an enabler. Financial services or a sector has never been an end product. Your end product is a food, clothing, housing, all those end products that we buy, right? The shoppings that we do. The financial sector always aids in your commerce. So that's, we always have to keep in mind that the way the commerce moves, the way the social behavior of consumer moves, the financial sector has to follow that and adapt to provide in that new environment all those products. So if somebody is buying a ticket or airline ticket online, and you don't have a money, you want to pay now, things like buy now, pay later comes, right? And that's enablement happened because of that need that was created. It's not that the credit wasn't available earlier, but the way the credit needed to be delivered at that point in time changed. And if you look at the same context example earlier, would be the Bajaj Finserv, who actually, when you were in an outlet, they were standing there that, hey, you need a EMI for this product. If you can't buy it, I'll provide it to you. So how the context changes, right? So more transaction happening through technology in a digital environment, you need these financial services to embed into those environments and provide you the similar services. That's how the behavior and that's how the whole sector start embracing the technologies. So I don't want to go into each of these details, but we already know that what has happened right from internet banking, when the internet came, when the people wanted to do things differently. Mobile banking is pervasive now. Digital payments is one of the biggest success story, which I'm very proud to be part of the entire 2-decade journey and the way we have grown. And today, India is always quoted, mentioned in a global forum whenever any discussion on digital payment happens, with so much work that we've all done. We've already seen what has happened in such a rapid pace, even during COVID with the new apps like Zerodha, Grow. There was a time something like ICICI Direct was big. Even before that, there were traditional broking houses. But how rapidly the things can change, right? Online insurances, of course, real-time credit access, I already talked about. So the financial behavior follows the commercial behavior, and as I said, it precedes the social behavior. Eventually, there are a few more stages, but just for a brevity of time, I've not added all of them. But let's say at some stage, you see all these impact at the economic level, and eventually you try to establish a new order, uh, which will look something like, and some of this is already happening, but in pieces, but you'll see eventually everywhere. So anytime, anywhere, which is like the reducing the time, instant on demand is already happening. Again, continuous and 24/7. So you don't have to stop anytime you want it. It's there. You don't have to look at the watch. Any service, any product, whether you want to buy, whether you want to inquire, it's all available. One additional point, omnichannel. So while a lot of people focus that technology will only enable the digital channels, when I say channel, it's more about delivery system, outlet versus digital apps versus internet. But I believe increasingly, depending on the geographies and countries like India, where you have different kind of a consumer, we also see that the experience of omni-channel, where customer has a choice that if he's ordered something and he wants to pick up at the store, or if you want to deliver it back at the store. So that convergence of all the channel, whether physical or digital, and having a seamless experience when you're moving from one channel to another is extremely important. And that is what is again going to get delivered by the technology. They're all integrated. So for an organization, it doesn't matter which channel you're using or how you're hopping from a channel, from a chat to an app to an internet, and then eventually to an outlet. They should be able to identify you as a customer and deliver to your need. It doesn't matter. And it should also give you still a continuous experience. I also talked, and I've been debating, while there's still a lot of debate out there where everyone says physical cards for a payment context won't be there, only digital will be there, all the products which are physical will become digital. I still believe that we don't know that yet. I think key is like omni-channel for you to provide all kind of form factors to the customers and they working seamlessly. So it should be left to the customer choice, because fundamentally it's just nothing but, let's say you buy an online policy, a digital may be fine. But if somebody wants a copy or a hard copy, they should be able to request it. In some situations, some people may still want a hard copies. It will also happen continuously that because of certain legal situations, you will need a mix. So again, it's important for any product strategy in a long term in a financial sector, they will have to have a multi-form factor capabilities, not only physical or digital. They have to work seamlessly, just like omni-channel. And I think increasingly the businesses will become borderless. I think when I say borderless, it means global. Most of your new technologies like crypto, they enable and they see customers' entire world as a one. They don't divide the geographies in them. So increasingly the experience of borderless or geographical distances getting reduced is what will get delivered. So that's the kind of new order we're moving towards. That's just the connecting the dots that when do you start looking at financial services changing? There's just some sort of a, I would say, a pointer in that direction. So I also talked about financial sector. It means different things to different people. There are two views that are put in. One is a sectoral view. Within sectoral view, you have two different views. One is the institutional view. Second is the fintech view. Institutional view, I've also put in all the stakeholders like government policy makers, regulators, industry bodies. So they are the one layer, and then below them you have all the industries, right from RBI led, which is one thing that we always have to remember that finance sector usually is not the first adapter, also because it's heavily regulated, and no regulator would allow anything which is tried and tested. That's also the reason you see those first two pillars. And also, as I said, we have to precede the original demand in the consumer of buying and selling, and also their adoption of the technology. So all these regulators will always monitor the technologies in that aspect and see how it happens. So I think we already know the sectors. So RBI-led sectors, SEBI-led sectors, IRDA, which is into insurance and pension. So that's the institutional view. Fintechs, again, all those uh, activities now being done digitally, right from digital banking to digital payments to kind of online remittances. Each of these are, again, a result of various technology changes and adoption. There are some which are not yet regulated. So again, crypto exchanges, crowdfunding, there's still gray areas. We don't know what is going to happen around them. So we're going to figure out soon. Also, how does the technology impact the overall consumer? So if you look at from a business view, there are two views, internal and external, right? External is all about your customer. So any technology, how would it impact anything that I do with my customers? As we used to say, traditionally the core processes which touches and feels customers. So right from customer acquisition to exit, which are the dimensions that can change with the different technologies? And lastly, internally, right from different areas to do with people, processes, product, and risk compliances. Even in a compliances, the supervisory tech, soup tech, as we say, rec tech, regulatory tech, all those are going to impact big time. The way, again, the compliances and monitoring happens. So why I put these dimensions and those 4 icons is just to discuss with these technology trends that, in my view, which particular sector at the macro level will get impacted, which ones will get impacted at the consumer level, which one will get more impacted at the internal level. So again, these are my personal views. You may agree, disagree. We're happy to have more conversation on that. So the first one, and again, I would say when I'm talking about technologies, I'm not going into explaining them. I believe there's enough material available there, and all of you are aware of that. So I'm not going to talk more about the technology per se, but talk more about what are the dimensions or impact on those 4 buckets: traditional and fintech view of the sector, and consumer side, and the entity side. So when you look at something like cryptocurrency, I think the Bitcoin is the only one which is trying to be the real global currency. Every other crypto asset, I think, or every other cryptocurrency that they call, or a private virtual currency, which is the newer term the Supreme Court gave and now adopted by RBI, is more like an asset. They are not necessarily currency, but they are still using the same term. I think at this stage, the impact or the implications is a lot more on the fintechs and the institutional framework, as we are in middle of debate whether government should ban or whether they should allow these assets. My personal view has been that this is a trend you can't skip. This is bound to happen. This is already underway. Like internet has happened, which has democratized information, entertainment, and communication. This trend will surely democratize the use of money and the money itself, whether we like it or not. And the concept, whether the Bitcoin survives or something else comes, but the reality is that concept is going to change the way money works, exactly like internet has changed a lot of things. And again, in that environment, the traditional currency doesn't work. I mean, you need something equivalent of a cryptocurrencies to work in an internet or a digital environment. So I think at this stage, the impact is a lot more on the institutions and a fintech. Of course, the consumers, those who are dealing in it, are looking at it, but still handful from an Indian context. While there's an interesting number, we're the second or third largest aware country about these assets. But this is a trend we can't skip. I would say this is next big thing after the internet, and we should watch out for it. Impacts are going to be very high, especially in the next decade. Sorry, I jumped the slides. So the next trend is the CBDCs and cryptocurrency notes. I think CBDCs, most of you are aware. This is nothing but imagine your existing physical currency on a steroid, and it is becoming digital. So let's look at this way. Today, every other instrument of money in the country is weaker than physical currency because of various characters like acceptability, store of value, let's say sovereignty, control, compulsory, regulated, that you have to accept it. So all kind of dimensions are in favor of cash, and no wonder you see still very high usage of physical cash in the country. Now, if you have to change that, you need a similar experience backed by the technology. And the only place the physical currency is a little weaker is when it comes to digital processes. When you have to buy something online or use something digital, you can't use your physical note. You need to convert it into some digital. And that's the only role currently most of the money, wallets, every other debit, credit cards are playing. But imagine the same currency getting on a steroid and also being able to play the same role in digital. And while CBDC is conceived as a digital kind of a part of the same note, ultimately every currency note has a number. The same number could be digitized and can act as a currency through your digital mode. But there are also increasing discussion to make it more familiar in a retail use, more simpler. Why can't we digitize the physical note, or have a physical note pictures in your digital form in your phone, and you actually have a very similar experience that, let's say if you have 100,000 rupees in your let's say digital wallet, you actually have different denomination, you can convert it in different denomination, spend it one by one as you do with any other physical note. So if you interestingly see the work that is happening already across the globe, this has come on a confidentiality basis through some agency who's working with various government to develop the cryptocurrency nodes. And interestingly, I don't know if you noticed, but there is a QR code on all these nodes, which is a digital version. So again, physical moving to digital, digital moving to physical becomes seamless and easy. So again, these are the trends which will impact the entire macro dimension, everything end to end. So again, each of those 4 buckets will get fully impacted with us. Well, I don't want to talk too much about blockchain, DLT, distributed finance. These are more of a back-end things that institutions are going to adopt, and they will keep evolving as the technology improves. And I heard Mr. Thodla already talking about some of the limitations of those technologies, but they are continuously getting overcome. There are a lot of institutions working on every night, every day, every hour, every minute to improve them. So there are going to be changes which will empower a lot of things at the back end, but you will see a lot more impact of these adoptions at the 4th bucket, which is more of the entity view. Which platform you adopt, whether you go for DLT, whether you go for blockchain, whether you go for DeFi. Again, they are all connected, but not same. And as I said, who knows, there would be 10 more terms. But fundamentally, you would have something which is auditable, trackable, real-time monitored, and let's say easily identifiable. That's what is going to happen, and still seamless and a fast and geographically less distant. So that's what is going to happen, and that will actually change fundamentals of the organizations, the way do their processes today in the businesses, and that would then reverse impact everything else. So again, this is something to watch out for. I think this is something which I don't need to explain too much, but if you see financial services, the holy grail, every discussion that we do, every conference you do, whatever subject you do, everyone keeps talking about KYC. And I hope you know KYC, it's know your customer. And it's compulsory across the globe, including India, that you need to capture customers' detail, their identity proof, everything. Address proof, the tax ID, all kind of complex PML issues. So all kind of issues. And that is becoming some sort of a pain, let's say, for every entity who tries to digitize. While we have evolved a lot with Aadhaar, but it was like 4 steps forward, 2 backward, especially after the Supreme Court judgment. Thankfully, RBI 2 years back came out with a video KYC regulation, so that helped people survive during Corona. Otherwise, imagine without fintech access to Aadhaar and no video KYC, I think there wouldn't have been any business. So while it has happened locally and we're still trying to figure out, I think at some stage as businesses are going to be more borderless, technology is going to enable it. It's not sufficient to have your identity linked to a country. It also should be passportable, or let's say valid, like your passport, right? Today you have only one physical document, which is passport when you cross border. We need to see an identity which works in all dimensions across the globe for businesses, for your own daily transactions, for you moving geographically. And I don't see that's very far. That has to happen. And in the new environment, that will be very critical for the whole financial sector also to work and grow seamlessly. I think a lot has been talked about AI, ML. People talk about chatbots. I also say next will be talk bots, when you could just talk. Natural language processing, robotics. While robotics, I would say more of for a financial sector, more of a digital part. The physical part is limited to where there are still some physical operations like card dispatches, statement dispatches, but it's largely all the software digital part for financial sector, less physical part. Maybe there could be some specific cases where probably drones, etc., could be used for asset verification in credit cases, etc. But the reality is that each of these are powering businesses, enabling them. I think, again, I would say the major impact here is how you deal with your customers, how you delight them, and how you monitor your organization risk compliances, and how you reduce your costs. So I would say it is going to impact a lot more, again, the entity bucket and to some extent customer bucket in terms of experience and communication with them. But I don't see the sectoral challenge, because here everything is already allowed, everything is available, just like blockchain. There are no constraint on institutional framework. It's more about customer and entities adapting it and driving it, and it will keep evolving. So again, it will impact those dimensions. I think there's IoT, mobility, driverless cars. There's also, if I add drones to it. So these are the trends that are emerging. These are going to impact, I think, fintech and a traditional organization a lot more. These are going to pose some fundamental questions. I mean, for an example, I would say, if there is a driverless cars and they're going to drive themselves, then who is going to take a driving license? Do you really need it? And then who's going to take insurance? Is this car really owned by you, not owned by you? Who's in possession or a control of that car? You're not driving, it's a different software driving it. If accident happens, who's responsible? Insurance company is going to take premium from whom? So again, financial services today provide credit to the sector, provide insurance to the sector, help, let's say, payments like tolls, etc. They're all dimensions. Each of those businesses have to be changed or looked into completely different the moment the whole mobility aspects come in. Eventually, you will see Uberization in the entire mobility sector, which means any public transport or a private transport, anywhere where you move from point A to point B, it will be done in a completely different way. Your experience will be very different, which will require the entire financial sector, let's say, support to them in a very different way. And again, if you look at IoT and if you extend it to drones, again, it becomes very different. So if there is a, let's say, cash on delivery or a payment on delivery, the drone is doing a delivery, how do you process the transaction? Whose KYC do you take? How do you identify which device has actually collected this? So there are going to be a lot of interesting, again, policing. If it's going to be through drone, how do they collect traffic fines? So like I said, the core needs are same or a core requirements are same, but the whole process and the whole business models around it will change completely different. So the whole IoT aspects will also bring in, let's say, if you first start ordering food for you, then whose wallet identity you take? Do you allow, let's say, the owner of one single business account, a human, to add multiple IoT wallets and control and manage them and without complexities? So they're going to be a completely different layering and a transaction. And again, if you have to do it real time, it has an impact on a time, distance, complexity of cost, processing, and you still have to do it seamlessly. So those dimensions will change. Again, this will impact the fintech and a customer experience a lot more. At the policy and institutional level, some of the policies will have to change and they're still evolving. We just saw some drone policy which has allowed certain entities to now fly drones and do certain activities with them. It's very early stage, but these are the areas that we have to watch for, because in next 5 to 7 years, these are the ones that will change the landscape again further different. I mean, again, just a decade back, if you see, nobody could have contemplated what Uber could do to transport. Again, the same thing will happen in some of these areas. I mean, this is just out there. I'm not saying anything, but we all know it's a reality. There are already flights gone to space and back. Again, in a decade, this will become a mainstream. There are already cryptos that are saying that we will be the currency in the space. There would be additional dimension to the right from insurance to credit and everything else. How would you manage that in those completely new business model is going to be up for question. But like I said, it's all going to be technology driven. These trends are going to be there, and this also brings a lot of opportunity, but a lot of work that needs to be done and redone in a new way. So some of these trends I see at the macro level very relevant. I've not gone into functional, let's say, a lot more functional view of these technologies or micro views, because I believe some of you already are aware of it. And I didn't want it to go into, let's explaining what of these are. And I would just conclude by saying that fundamentally, the business models increasingly in the financial services will move away from being a vertical organization to a horizontal. What do I mean around it? It will be more like customer lifecycle, very similar to your platform businesses or tech platforms like Google or like Amazon, because you can't survive just being a bank, just being an insurance company, and within insurance company, just the general life insurance. You have to do what your customer wants. And again, just having one license wouldn't really kind of make you relevant in the long run. So you need to look at the business models very differently around the customer life cycle, not the way the licensing happens. And like I already reiterated, the businesses will become global, whichever business you are. If you're not global, if you're not able to cater to the entire globe, you're not relevant. And ultimately that would all, because this whole sector is depending on the government regulations. I think how our government and the regulators work with other regulators and a government across the globe will be the key in India becoming successful and some of us being able to take full advantage of these technologies. So that's where I stop. Over to you. Happy to, I think, get into conversation with Professor Ravi, and then as many questions as possible. I'll stop sharing now.
Okay, thank you, Surya sir. I think I'll share some questions that have been raised by Dr. Ravi.
Sure.
I hope all of you can see the screen.
Yeah.
Yes, ma'am.
Yeah, yes, ma'am.
Yeah.
We can see.
So Surya sir, on behalf of Dr. Ravi, he has already given some questions that he wanted me to ask you. So first question number one, if I were to ask you to trace the origin of the integration of technology and finance, where would you begin from?
I think it's all started with the advent of personal computer. I think before that, everything was paper and physical branches in everything you do. So I think the whole dimension could be attributed to the very early stages of computerization at the bank branches, and then leading into the core banking where you could kind of connect all the branches to one, and parallelly ATMs coming out, and somewhere a zigzag machine. I don't know, a lot of people, if you're aware, very early days credit card used to put it on a machine and used to do some activity on that and your transaction will process, and then later on a landline phone got added to that. So yeah, I would actually go back and trace to that level, and from there it's not very far back in time, just about 2 decades, and we already have made huge progress since then.
Okay. Question number two, in spite of all the upbeat expectations about blockchain, why it has not really taken off along the expected lines?
See, I think we've not understood the real, let's say, advantages of blockchain yet. Let's say there are very clear use cases that are identified and it has been successful. So one big use case is already out there, which is cryptocurrency. We already see how big it has grown in such a short time. But beyond that, we have not been able to. So what has happened is, if you go back in history with the computerization, it used to be a client and server kind of a method, right? You used to have a client and then you'll be server, all the data will go there. Then came the internet, it further kind of made it simpler that you didn't need a client, everything was centralized, any client will work, right? So you actually, everything that you did it out of a centralized database and seamlessly. First time you're talking completely reverse. You're talking about a decentralized database, decentralized method of verification, authentication, and then working around it. It's actually turning the whole business and a technology upside down. And we're trying to apply it to those old processes. And people are not able to identify that how to really go about it. So there are two ways. There are some very clear big use cases like KYC, for an example. The global borderless KYC, if it has to happen, it will have to happen on something like DLT or a blockchain, right? So again, there are some huge big applications that can immediately go on property records, etc., right? But then in every other dimension, because it is distributed, you have to build it in a micro to macro. And those implementation methodologies and those differences are not yet clear to a lot of people. And they're struggling to change their thought process from a client server, which moved to centralized, and centralized to now again back to distributed. So that transition, even in a technocrat's mind, the way they architect, is still taking time. And I think the day that becomes clearer, and the day there are a lot more examples beyond crypto, maybe some more, 1 or 2 more examples of KYC kind of a database, you would see a lot more adoption from it.
Okay. Question number three, Surya sir. any innovation in technology is always embraced by finance first. So Ravi sir already said that technology and finance are flirting together. So how would you explain this?
So I would say yes and no, because as I said that finance is slightly laggard. It's not that, okay, within different business segments, when you compare to, let's say, other industries, yeah, finance is higher. And as I said, because the whole adoption curve moves from basic information communication entertainment to immediately commerce. And the moment the commerce has to be enabled, and even on those information communication and entertainment, the finance immediately get embedded with that. So it's like, you get that some sort of it's like a monkey off the back of these two initial dimension that you automatically ingrain. So you get that advantage. So any changes happening in those sectors, you automatically piggyback on that. While other industries need to do more activities and they have to understand more. Maybe if we didn't have regulatory challenges, we could be the first in some aspects. But as I said, currently it's very closely tight knitted with these two dimensions, that anywhere there's a commerce, you will piggyback and you will adapt.
And about RPA, robotic process automation is making silent inroads in finance, particularly in the banking sector. So what do you think is the future of this technology?
So like I said, there are two aspects of robotics, right? One is the software aspects where things are getting, which is more in a form of AI, ML. And there's less aspect of a physical robotic arms or robots or other things. I'm not saying that they won't happen, but my view is that it's going to be more of a AI, ML, and robo advisory, which is more of a neural or a human brain functions, processing function. Yes, there it will happen. The physical part of robotics, I think, will not be as big. There are some experiments that were done that can we replace, for an example, in a branch, certain mundane activities by robots instead of by a human, right? So yeah, those some stray things may happen, but I don't see, let's say, financial services on a hardware side to be the bigger client. But yeah, all the software side, solution side, piggybacking on the existing devices will happen big time. We won't be competing with a manufacturing kind of a setup or a logistic kind of a setup where the actual physical robotics will get used. But yeah, we will use it wherever possible. As I said, the whole intelligence part of it.
And in your opinion, will the robo advisory services be able to completely replace the traditional investment advisory services, sir?
Not really, I think, because again, a lot of these services are highly customized. So
Yes.
I guess the roles will keep moving and changing. So for an example, the way the traditionally even physical branches were used in the past and now are very different. So same way, the way, let's say, currently the human beings driving certain information versus robo advisory will change. If it is basic dissemination of information, is basic nudging, it could be done by robo advisor. But if it is requires a skilled, customized job, I think it will still be human. I mean, thankfully, we will still be the masters.
Okay, correct. And question number 5 for you. Information security has always been a matter of great concern in the evolving hacker environment, particularly from countries like China and even Russia. So how prepared is the finance industry in India to handle this threat?
So the answer is always relative. I mean, there's never a black and white answer, right, to the things like these. The reality is these are real challenges. These are the way the advantages are real, the disadvantages are also real, right? Every coin has a two sides. It depends, a lot depends on the ecosystem adoption, awareness, and education. And that's where all of you also come in, how you help disseminate that faster. I could only tell you the good news is that we are one of the best countries the way we are managing it. We follow all the global standards or better than them. Our country, take an example in payments. Our country was the first one to adopt universally the OTP method, that we all use, right? There are still countries like US where you just swipe your card, no PIN, or you just put your card number and expiry date, it's done, right? So the fraud rates there are much higher. So I would say that because we also understand that India's demography is a lot more mixed with people who understand and don't understand and still use technology. The regulator and the government had made sure that we have a lot more security, let's say some sort of additional controls put in or additional processes put in to control it. That said, I'm not saying it can't happen, but I would say that the numbers are a lot lesser. I think these are in basis points versus the, let's say, single digit percentages in many other countries. So that's a thankful good part in the country, but also we see a lot more frauds, and the risk in India arises because of the lack of awareness and a communication and a greed. I mean, more than anything else. So it's most cases that we see is about getting information voluntarily shared by the consumers without understanding, or they get lured, right? So it's a very simple education and awareness dissemination that can actually fix it versus the core hardcore technology hacking. So we yet not seen too many very hardcore sophisticated hacking, like you keep hearing millions or billions dollar getting hacked for a variety of reasons. So it's still at a preliminary stage, and thankfully we have the institutional system in place, the standards in place, the agencies in place to look at it. The only piece which we always find weaker is our enforcement system, which is the police, the way they deal with the cyber crime. Thankfully, a lot of work now that is happening on integrating efforts there, and I guess in a year or so we will be again one of the best in that area as well.
So good to hear that, actually. Then question number 6, if I were to ask you to single out 3 emerging technologies that would disrupt the BFS sector in the future in a big way, what would be your list of 3? That is, those that would emerge in the future.
So I would put more as a category, let's call it Trinity. The one Trinity, the first dimension of that Trinity will be everything around crypto come blockchain. So whether you call it CBDC, private assets, currencies, I mean, that one full dimension is going to impact everything. I mean, at a very macro level, going to change a lot of things. The second, which looks simpler but still complex, but this whole thing around digital identity and how borderless it can become. So that's the second thing. And third is all about AI, ML. I think a lot more monotonous processes will change, and financial sector would need a lot more skilled people to manage these rather than just doing mundane jobs. So yeah, that change will disrupt in big way. So if your job is just to do a call center, just answering some mundane questions or just stamping some document, just making the same entry, yeah, these are not going to be there. But if you're in analytics, if you're going to kind of risk management, if you're on a compliances, those are going to be very valuable jobs.
Okay. And the last question, I think, progress is the exchange of one form of nuisance for another, but that does not prevent us from progressing. So what would be your word of caution to the innovators, practitioners, and end users?
Actually, there's no word of caution, right? Because we are all made differently. See, we all do things we live for experiences. Every time we adapt to something new because it gives us a very different experience and different emotions doing it. And each person has his own evolution and its own way of learning from its own mistakes. What we could only do and what we could only advocate is that whatever new venture, that new activity, new process that you venture in, just familiarize yourself, just understand pros and cons of it, and then decide. See, we always have biggest debate on areas which I have not talked here is privacy and security. And there are two dimensions which are very different. And when you look at from an individual perspective, they mean very different things to someone else. I mean, somebody is extremely fine even sharing, let's say, his card and a pin with his driver. And somebody may not even share it with his son. I mean, it's a highly individualistic. How do you define rules in this? All you could deal is, or all you could do is leave it to their intelligence, but provide all the possible information that how it can be misused, what it can be. This whole notion of security, convenience, right, and let's say privacy is all about that individual's choice. As long as he's aware of all possible risks, what could go wrong, that's all we could do. So I would say that my only caution, or not even caution, it's just advice that be open for newer experiences. That's what the human lives are for. We should do it, and that's what we end up doing anyways. Just be aware. Just be aware of what you're getting in. Sometimes people like adventures, so they don't want to be aware. So again, you can't stop that. It's highly individualistic. So I don't want to preach anything. I would say, thankfully, our country is now on a digital dimensions increasingly becoming aware, while all the regulators saying that people are not literate, not smart, so they don't understand. The reality is they all understand better than what we understand. For example, we discovered words like numeric literacy, right? So we find out that people, how would they use the financial applications if they're literate? But they could, because if the app required only numbers, they understood numbers. So there are ways and means things happen differently. And I think we should not underestimate human willpower and intelligence. They are all good. They understand it. Our job is to make sure more and more information and awareness is created about newer things and let them decide.
Okay. So thank you, sir. So these are the questions from Dr. Ravi Thodla.
Sure.
And now the floor is open to the participants to raise their queries. I think
I also see some questions in the chat. I don't know if you're going to talk about them or.
Yes, sir. Bhaskar sir has raised his hand. Bhaskar sir, Dr. Bhaskar.
Yes, madam. I'm on line. Hello. Good morning. Good morning.
Hi, Bhaskar. I can hear you.
Bhaskar sir, can you? Yeah. Can you put forth your question?
Yes, madam. I am. Yes, madam. Yes, madam. Sir, good morning, sir.
Morning.
Hello. Good morning, sir. So I am Dr. Bhaskar. Sir, I would like to ask you one question. So you're talking about digitalization of currency, and then you're talking about cryptocurrency, everything, sir. So what about the impact in the international stream? Because you see, we used to say that in terms of dollar. Now, in terms of currency comparison, our Indian currency has become, if it becomes paperless, already it has become valueless. Now, what will happen if you talk about that currency impact when you talk about dollar and the cryptocurrency?
I wish I knew that, then I would be like $1 billion guy already. I would just do all my trading. But very good question, Bhaskarji. I would say
thank you.
We already know what China is doing in a CBDC, right? I hope you're tracking that. They are trying to create a digital yuan only for international trade. And unlike many countries, their CBDC is first focused on international trade or a wholesale transaction as they say. Unlike India, which is talking more retail. Sorry, somebody else was speaking.
Sir, good morning, sir. Please proceed, sir. There is some interruption.
Participants, please mute yourself. Let Bhaskar finish. Then we can proceed to your question. Bhaskar sir, do you have anything else to ask?
No, so I was just completing.
Sir, it's not yet completed his answer.
Yeah. So I was just.
Sir, I have one question, sir. Good morning, sir. I have one question.
Sir, hold on. I'm just answering Bhaskar sir's question.
Yes.
Come to you. Madam will come to you. Just 1 minute.
Okay.
Yeah. So I was just. So Bhaskar sir, I think India currently does not allow full capital convertibility, and that's the choice. If we are going to go to CBDC, and if we want to be relevant and protect the value of Indian rupees, and we keep it making more relevant and competing with yuan and dollar, then first we will have to look at dimensions of the capital convertibility, then create a wholesale currency which could be accepted in a digital environment, which we could do better job than many other countries, and make it acceptable globally for international trade, especially in a digital environment. That actually could help us a lot. If we don't do, then you're right that we still risk of just being a follower and continuously at the mercy of others' development.
So thank you very much, sir. Thank you very much for the answer.
Thank you, Dr. Bhaskar. Please mute yourself.
Thank you.
Okay, sir. Good morning, sir. My basic question to you: is there a chance for demonetization in bitcoins?
No way. How? So there is no central authority or a law, so it cannot, and it is democratized already. So I would say no. So there you are at least saved.
Sir, in that case, if normal currencies is demonetized, then what will happen to the Bitcoin?
Nothing. I think Bitcoin will maintain its relative position to those currencies depending on how they devalue or appreciate.
Is there a chance for an Asia currency, sir?
Okay, first of all, understand that Bitcoin is aspiring to be currency and no one else is doing that. It's only Bitcoin. And there are a lot of people who are trying to establish it as a global currency in a digital world. And it all depends on the demand and supplies, that how many people are actually buying and selling. Currently, it's a lot more driven by trading than use cases. But that said, the use cases are continuously going, right? So more use cases means more demand. More demand means more appreciation. But if the use cases and a demand does not continuously appreciate, and if countries manage their local currency, that's another dimension. Bitcoin will always go up. If certain countries in Africa or other places don't do well, people would want to rather store their value in Bitcoin.
Thank you, sir.
I think we have a question from Nasratun. Will RBI regulate Bitcoin trading in India?
Well, RBI currently is not regulating cryptocurrencies, right? So far, there is a bill which is attempting to empower RBI to issue digital Indian rupee, which is the Indian CBDC. There is a separate bill which is, sorry, the same bill has a separate aspect which talks about banning all private cryptocurrencies, other for research, etc. purposes. Now that draft bill is 3-year-old and things have changed a lot in private crypto space. There are a large number of exchanges, customers already now trading. So what happens to that segment is unclear. On the other hand, if you see, there are different ways the same subject gets dealt, especially the private side of a currency in a different countries. If you look at Singapore, for an example, they're trying to divide it into 3 dimensions. CBDC remains central bank jurisdiction. If the same is going to get used as a payment option, again, it will go to the central bank, that aspect. But if it is about trading, listing, that dimension of asset trading as a crypto as asset trading is actually with the securities regulator. So it's still unclear, will RBI divide the jurisdiction and let's say give the trading part and the listing of those coins part to SEBI, and RBI only giving guidance if there are foreign leg of a transaction like they do for foreign equity investments, which is allowed in the country, where just the reporting, and then rest is monitored by RBI? Or will there be a complete new setup? For an example, we have IFSCA, which is more like a UK model. Somewhere even in Singapore, Malaysia, you have a single financial authority. So IFSCA is for a gift city where all financial services regulation is with one single authority. Now, if you talk idealistically, you need one single entity who understands this dimension and aspect and regulates it. But we don't have clarity in India yet on 2 aspects. First, whether India wants to completely ban private cryptos. And secondly, if they don't want to ban and are open to regulate, which is what we are advocating as an industry body, that any banning has never helped, whether you look at prohibition or gambling. It only leads to more criminal activity, more black money formation. So rather regulate it. And if we can regulate futures and options in stock, why not this? I mean, this is actually lesser riskier than that. They are clearly nothing but a speculation. So we are suggesting that we can regulate. Now, who becomes a regulator comes the question after that, whether divided, single, integrated, or a new regulator. So that question is still not answered by the government itself. I mean, if I'm not wrong, there is a committee now looking at into that bill as to what happens to that fate, to that bill's fate.
Yes, sir. There's a question from Aarti in the chat box. Bitcoin is still being considered as more investment and not really like currency replacement. Please share your comment.
No, which is true. Like I said, that Bitcoin has aspiration to become a global currency, but yet not established there. No other crypto, I think the word currency was a wrong terminology. I think it's a crypto assets only. There are different kinds. I'm not getting into it, whether stable coins, NFTs. It's another sessions altogether. But all of them are not currencies. They're more like assets. You're absolutely right. These are all different form of a value and assets.
Thank you, sir. But when the Bitcoin was initiated, I think the purpose was also dual, right? Should be also used as a currency, right?
Yeah, which is what I just said, right? That they aspire to be the global currency for the world in internet, on internet, which still is their core philosophy, that they want to democratize money for the let's say human beings, the way internet has democratized information and communication. That has been their aspiration.
Okay, sir. Thank you. Thank you, sir.
Dr. Suhasini, you can proceed. You have also put up
a thank you.
Yeah.
Thank you. Yes, I put up a question there in the chat box also.
Yeah.
Thank you, sir, for this insightful session. I have a question. Am I audible to all?
You are audible. But
am I audible?
Yeah, you are audible. But
am I audible, ma'am?
Yes, you are audible, but voice breaking. Okay, I think some.
I hope it is clear. It is okay now.
Yeah, okay now. Yes, okay.
So, sir, my question is like we are using technology in the financial sector since quite a few times, and we talk in the literary articles that the initial inclusion. So many people still it is a certain point not than 50%. Though we have started this Janadhan Yojana in 2015. So what do you think that why the technology is not able to, include a bigger, larger chunk of the population under its ambit, despite we are having this technology with us?
Very good question, Suhasini. I think this is about pertaining to inclusion in financial services.
Yes, sir.
So there are multiple dimensions. If you see today the status of financial services in the country, other than banking, which is the largest, penetrated about to 40-50% of the population. But again, if we see the active bank accounts, they are still less than 20-30%. So, but can we mute others? We can't. Sorry. Yeah. So banking is the largest penetrated, followed by payments, which is around 15% active users. But if you look at every other service, insurance, investment, credit, the penetration is in early 2 digits or a early single digit. If you go to the investment like securities investment, we're still talking about 2-3%. So you're absolutely right. So your question is that why the adoption is not high. I think it goes back to the same thing that as the literacy, awareness, and connectivity, there are many reasons. One is the access of a technology itself. It all follows the penetration of internet, mobile phone, the infrastructure, the connectivity. I mean, even a week before I was in. Can we please put others on mute? I can't even hear anything or say anything. Sure. Thank you.
Participants, please mute yourself.
So the other day I was in Kashmir and even in Srinagar, beyond certain places, even though we come from Bombay, you have no connectivity. So those are real issues. So it starts with connectivity, access to connectivity itself. Then comes that having connectivity and access to these technologies. Do you understand how to use it? Let's also understand that we still have about 40-50% population, which is probably above 50 years age. I'm not giving actual number, but some approximate numbers, right? And some of them again may be literate, not literate. So again, their inclination to use technology. Also, one interesting point that we discussed during Ratan Vatal committee, that we oversold bank accounts, which is not the real need of majority of customers. Bank accounts are relevant only for people who, after spending all their money on their daily needs and taking care of their dependents, have money left to save. And unfortunately, in our country, there are only about 20-30% population who have money left after all those. So majority 70% actually just living, let's say hand to mouth, or some of them below poverty line. So let's say first 20% below poverty line, or let's say just around the poverty line, where they're just able to eat food and then just survive. And then you have a next population of 50%, which is able to survive, manage their lives, but they have no savings. So we actually created a chart called hierarchy of financial services need, like your Maslow's theory of needs, right? So we also said that you need to focus and target services like payments, emergency credit to all of them. And if you see, even today, we don't have enough ways to deliver those services to them. But wherever you deliver, if you look at the microfinance sector, you will see that in next 3 years, it will rapidly get digitized. So initially, if you see today, 80-90% of collection is physical, disbursement is now gradually getting digitized, but you will see eventually the whole sector from physical to more digital. So if you go and deliver that need of emergency credit, payments which they need, little bit of insurance like health, which leads to poverty if not done, then probably they will adapt because there's a direct need. There is a reason for them to adapt and understand. I think then you look at remittances, those who have left some money, they want to send money to their dependents. So again, remittance, migrants. So again, if you see within payments, the migrants or a migrant remittances is a very large chunk. This is the reason that some of that population is adopted. So I'm saying that unless we match this demand and supply curve, the adoption will not happen. And unless we treat that as a core inclusion, not just the bank account. I always say bank account, putting that in front is like putting cart before the horse. You put these three services as a horse, banking will automatically happen. As these guys will evolve, will automatically move to banking if they have money left and saved. But if you just do that, you see, I mean, we all know it's an open secret that the number of inactive accounts are very high. I mean, the numbers of balances, deposits all growing. The active bank account numbers are not rapidly growing. So your question is very useful and very good. And as I said, the real answer is matching this demand and supply. And obviously, as the profile of education, literacy, connectivity, infra changing, you will see this changing rapidly. And that's also the interest of a fintechs, right? That as the policy supported, they see a opportunity to deliver and disrupt the cost structure so that they can still do that small value transaction with these mass population. But that can't happen in traditional model anyways.
Thank you so much, sir. So might be making few of these services mandatory from the government side, and providing the infrastructure to grow upon these type of services can be an answer.
It's not as much about mandatory, but the way we kind of emphasize the whole campaign around bank account, we needed to, and they did little bit around even credit and insurance, if you see, but I think it should have been other way around. The bigger should have been credit and insurance, and bank should have been lower. So if you would have changed that dimension, probably you would have seen better outcomes. So we are having these dialogues regularly with the policymakers, but somewhere in our entire system, it's ingrained. Bank is like holier than thou, and then everything has to revolve around banks. So it takes big time to change that mindset. We're saying that bank is an important entity. We're not saying it is not, but the work they do is of a very high value, high risk, and then their risk and the processes are very different. When you're dealing with the segment who lives on $200 a year, right? And then a month, and the financial services are a small part of that. To make feasible and expect banks to deliver is going to be extremely difficult. So you'll need newer model. So you have to open up. So as a result, you see now today, a lot more newer licenses are coming to empower fintechs to deliver credit or other services. Or let's say they are empowered to do a lot more activities independently. So the dependence on bank goes down. But at the same time, you need, let's say, as I said, other factors in place, and government to do also more campaigns around awareness of credit dissemination, insurance, especially medical one. I mean, we have enough horror stories that one person on these families getting ill, and then they are all got into the poverty cycle. They can't pay up, right? And Corona time was always difficult. Thankfully, we all survived the social structure, but these are the real issues. We need to find right solutions. Can you hear me?
Sorry, the voice is interrupted.
Okay. Yeah, can we go to the next one?
So, Kapil, I think few of the last lines. Thank you so much, sir. Sir, can you please repeat once that which committee name you have taken? What was the committee which was working?
Vatal committee. Dr. Ratan Vatal committee.
Vatal committee. Thank you so much.
Yeah.
Ratan Vatal.
Yeah. I've just removed the video so that in case there are connectivity issues, at least audio will be clear. I can't hear you, madam. You're on mute.
Ma'am, can I ask one question?
Jayanti, ma'am, do you have any question?
Yeah. Should an individual investor invest in real estate and give importance to insurance at this pandemic time, sir? What would be your view on it?
Sorry, I missed the first part. Insurance and real estate, I didn't understand. Sorry.
Yeah. Should it be given importance by an individual investor at this time? Because it's pandemic time, right?
It's highly speculative to talk about the real estate and the insurance, right? I think it's very difficult to answer this. So I would rather stay away from answering something which will be speculative. But I would say, yeah, generally insurance is surely important. Real estate, I'm not too sure. If you're talking in a current context of pandemic, health insurance is definitely where a lot of people are focusing on in the industry from the government. And there are a lot of programs. If you see, even government keep advertising about the one program which has helped COVID patients. So yeah, medical insurance should be literally like a need of every individual and should be provided. Real estate, I'm not too sure. I mean, that depends. There are different views in different locations and different needs, but medical.
Your view, sir.
No, see, real estate is a bit of fall sick and ill, right? So that definitely needs to get protected. For you to live, you don't necessarily need to own a house in today's time. You have a lot of new models coming in, right? Shared living, tenancies, and the costs are gradually coming down. So I'm not too sure required on real estate. Maybe affordable housing, some sort of a community housing, that's already happening, I guess. So I don't think more is required at this time. Medical insurance, I fully agree with you, not the entire insurance, which needs to be driven as much as possible.
Okay. So if there are no more questions, I think we can wind up. Yes.
Thank you, sir.
Sir, Ravi sir, yeah, yes, sir. Yes, sir. Ravi sir, please unmute yourself, sir. Sir, Ravi sir, we cannot hear you. You have to unmute. Oh, our.
I think your admin has to do this.
Yes, sir. Now you can continue.
Yeah. Okay. I just wanted to add to what Mr. Naveen said about financial inclusion. Actually, when the government came out with this idea of financial inclusion, what they primarily had in mind was not about investment and insurance. Actually, they wanted to plug the leakages in subsidies that were flowing from the government to the people. And at that point in time, if they had integrated both insurance, investment, and along with that, this plugging of leakages in subsidies, it would have served the purpose. And since the government only thought about plugging the leakages in subsidies and wanted directly to remit those subsidies to the end users, they probably did not succeed to the extent to which they would have really wanted. That's one thing I wanted to say. And with the permission of Mr. Naveen Surya, I would like to thank all the participants and all the people who have given us all a very patient and inquisitive listening. And I would like to end this with a small story. An airplane with 4 international travelers got hijacked, and these people were held for ransom, and all the governments refused to pay. The people who were there were, that is, one from France, one from Britain, one from US, and one from India. And the hijacker said, your government is not going to pay, and we can't let you go because you have already seen us. So you will identify from a whole list of photographs from Interpol or databases. So we are going to kill you. So what is your last wish? So the British said, give me 2 minutes to talk about my country's glory in the 20th century. Granted. Then the Frenchman said, typically, he said, I would want a glass of vintage wine. Granted. Done. Came to India, and the Indian said, let me talk about emerging technologies in finance. And the American said, shoot me before he starts. I hope that was not your experience. I did think that when Surya came to the floor, he got the whole thing, taken to the next level. It was so very interesting, and there's a lot of learning for me as well. So on behalf of SRM College or School of Management, SRMIST, and my faculty colleagues, S12 faculty colleagues, and Mr. Surya, I thank all the participants and all the intelligent questions that were raised by the participants. Thank you so much, and thanks for the opportunity, madam.
Thank you so much, Ravi sir. I know I can always count on you. So thank you so much for that wonderful session. And I also especially thank Mr. Naveen Surya, because in spite of his busy schedule, I know it's very difficult to get his appointment. So thank you so much on behalf of College of Management for having accepted our invitation and for being with us here today and sharing your rich experience on fintech, blockchain, cryptocurrency, and so on. And also for sharing your valuable insights about, from the point of view of the government and also as a fintech leader, you have been giving us valuable insights today. So thank you so much, Mr. Surya, for your valuable time. And we hope to have more such sessions from you. So thank you for that.
Thank you, Kavita ji. Thank you, Ravi ji. Thanks for this opportunity. Looking forward to interact more in future. Thank you all the participants for patience.
Thank you.
And making it very interactive. Thank you.
Thank you. So participants, we can take a break now and we can join back by 11:30. Okay. So I hope all of you have given the feedback for session 4, and we will all meet again by 11:30 for session 5, and session 5 will be handled by Mr. Rajan Babu. Okay, and he'll be talking about HR tech and the different emerging technologies in the HR sector. Okay, so thank you all.